Well, folks, they're here. The Trump tariffs have been announced. They're going into effect April 5th, and we're going to break down exactly what it all means and where it's going to leave investors moving forward. First and foremost, the Trump administration announced a 10% tariff across the board against any country, with the exemption of Mexico and Canada for now. This baseline 10% tariff rate is set to go into effect on April 5th, and it has already shocked markets as we've seen a drastic drop in the stock price of many major companies, and overall prices on the Dow Jones and the S&P 500 have dropped into what many are calling correction territory. Despite originally being branded as reciprocal tariffs, President Trump did go out of his way to make sure and say that these tariffs will be roughly half of what any country is charging us, so they will not actually be fully reciprocal tariffs. The president also announced a 25% tariff on all auto imports that went into effect nearly immediately and has already begun to shock the auto industry and leaving investors really wondering where to turn next on that front. Another major note is that tariffs have been upped dramatically on China. We were already tariffing Chinese imports at roughly 20%. Another 34% has been added on top of that to come to a grand total of roughly 54% tariffs on all Chinese products in retaliation to a lot of the trade disputes that we've had with the Chinese during the Trump administration. With all this uncertainty and relatively no idea of where things are going to go next, many investors are already turning towards low risk and protected investments. We here at Confluent offer our own variety of protected investments that can help you still invest in the market, but limit the possible downsides of what could be coming next. So go ahead, click that link below, learn a little bit more, and do your best to prepare yourself against anything that's coming next in this incredibly volatile and unpredictable economic climate.